Nvidia, the stock bounced. Now listen to this. Don't laugh. This company has lost more than $300 billion in market capitalization from the top, almost a straight line. It's been a hideous stock, as any decline I can recall, frankly, down 10% alone on Friday. Now, the stock mounted in advance today, but not enough to erase Friday's gains. Nvidia's gone from being the star of the show to being the goat of the game, and I'm not talking about the greatest of all time. Of course, we've learned from multiple pieces of research today that Nvidia, the business, is doing quite well. Now, I think the stock finally got cheap enough to start tempting people. I don't want to make too much of Nvidia because all high multiple stocks came roaring back today. But if Nvidia couldn't rally today, it would have been a horrible sign. Luckily, it didn't happen. I don't know how much staying power Nvidia stock is going to have, though, tomorrow, because after the close tonight, Cadence, a very close partner of Nvidia, guided down for both sales and earnings. And that is surprisingly bad.
The House of Pain.
I need to dig deeper in this one to see the impact on Nvidia, because we got multiple reads today and Nvidia's doing quite well. I don't get it.
So how much is broken here from the paradigm, the momentum trade of the first quarter? We got bonds selling off. We got Nvidia turning around. Is this like the end of the good times, or is there some hope here?
No, I think really it's going to be the struggle session that we've seen. You know, I heard you earlier asking about when do yields start to bother the stock market. The answer is 10 days ago when they hit 450. Yeah. And I think that seems to be the magic level, that, you know, it's not a bear market. It's not going to be disastrous, but it's just a big headwind for the market. And as long as yields stay above that level and maybe trend higher, I think that headwind is just going to continue to be a problem for the market.
CNBC's Mad Money host, Jim Cramer, recently called Nvidia the GOAT of the game. And he might just be right. Despite a recent nosedive, Nvidia stock is back up after it saw a jump of more than 3% as of the time of this video. Everyone who bought the dip must be over the moon right now, but no one really is talking about why Nvidia stock soared so much and so suddenly, and what that means for investors. That's what we're going to talk about in today's video. And we'll also share some of Nvidia's latest news and give you our opinion on Nvidia stock to help you decide if it's currently a buy or a sell. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market. So click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
I just want to know how high the bar is. Do these companies need to really jump over something that's actually quite sizable to convince investors that this rally can be sustained that we had at the beginning of the year around tech?
Well, it's very interesting when you look back the last time. Now, I know Nvidia isn't amongst those that are reporting this week, but last time Nvidia reported, the stock dropped into the earnings. People were saying, oh, I can't possibly meet what back then were pretty elevated expectations. And then it completely blew them out of the water. So on the one hand, you have that recent history of concern going into earnings, but there's that second part. The earnings really astounded to the upside. And so I think that that's part of what's helping to drive some of the concerns going into this earnings season, is that it is very much about the Magnificent Seven. They're expected to show growth in earnings. The rest of the S&P 500 is expected to show a decline. So there's this big burden on them, and they probably do face a pretty high bar, in particular to be able to spur sustained gains, because everyone's digested, those Nvidia earnings, some of the other earnings that have gone along. So there is a high bar, not just about what they report now, but about the outlook. Again, recent history, TSMC, the Taiwan chip producer, it reported just recently, and on the face of it, those earnings looked fairly good, but there were concerns about the outlook. Some of the impact got a little bit washed away by the geopolitically induced fluctuations that we saw at the end of last week, but it was still there. And it even came down to, I saw some people talking about the biggest problem with TSMC was that the CEO on the call seemed, far less upbeat. Just his body language wasn't great. Whereas last time round, there were also challenges within the earnings, but he looked and sounded very optimistic, as though, the only way forward was up. So I think the Magnificent Seven need to truly live up to their name and be magnificent, those of them that are reporting this week. Otherwise, we could have some further underperformance from them, or also, there's the concern for the rest of the equities universe, and that highlights one of the concerns in general, which is that a lot of the rally in the last little while has been so narrow.
The tech landscape is constantly evolving, and staying ahead of the curve is a never-ending challenge. Investors are always looking for the next big thing, but finding that breakthrough innovation can be tough. Plus, competition is fierce. Each big tech player is jostling for dominance in areas like artificial intelligence, cloud computing, and self-driving cars. So, the pressure to constantly innovate is real, and maintaining a competitive advantage can be expensive. Nvidia has felt some of this pressure from the market, which has weighed heavily on the stock. However, Jim Cramer, the ever-outspoken host of Mad Money, and some other Nvidia bulls have warned investors to look away from the current noise in the stock market and buy the dip. The bulls were right, and the stock is now recovering. As of the time of this video, Nvidia stock is trading at a 15% downside from its $950 peak for this year, and we've seen many analysts saying that it could actually go to and surpass $1,000. So could this be another opportunity to buy the dip? Let's find out. Hello everyone, and welcome back to Investocracy.
It's time for FOMO. So joining us now to discuss more on Nvidia, arguably one of the most FOMO-esque type stocks in this market, is Caroline Wood, senior markets correspondent for the network. So Caroline, there's always news on Nvidia. It's like Nvidia and Tesla are the gifts that honestly continue to give. So walk us through all of the various headlines and analyst opinions on Nvidia today.
Well, Nvidia, unlike Tesla today, which is lower, not taking part in today's rally, Nvidia is back in favor today. Shares up almost 4% after a really rough go at it last week. Friday, shares dropped 10%, lost something like $212 billion in market value in one day. It was the second worst daily loss of market cap for any U.S. company ever. Meta still takes first place there, but second place. So regaining some of that ground today, still down about 12% this month. It's not that the AI story has changed, Jenny, but higher rates, new aversion to risk have really made it vulnerable to some profit taking. And there's definitely profits to be had. Nvidia shares up 60% year to date, up 192% over the past year. Also, analysts say that geopolitical tensions could be weighing on shares as well. Now, those losses that we've seen more recently haven't rattled the bullishness of the analyst community. I saw Morgan Stanley came out this morning, reiterated its outperform rating and $1,000 price target on shares, saying we remain buyers of Nvidia post last week's sell-off. Doesn't report earnings until next month, but I did see that UBS actually downgraded the Big Six, so the Mag 7 minus Tesla, calling it the Big Six, saying profit growth momentum could collapse over the next few quarters, saying profit growth momentum is projected to decline to 15.5% by the first quarter of 2025. That's from 42.2% estimated for the same period this year. So still growth, but expecting the growth to continue to decline, saying our downgrade of the Big Six from overweight to neutral is not predicated on extended valuations or doubts about AI. Rather, it's an acknowledgement of the difficult comps and cyclical forces weighing on these stocks. That being said, Nvidia is a top performer or top pick for Oppenheimer with an outperform rating and $1,100 price target. Doesn't report earnings until May 22nd, so we still have about a month actually exactly, but points to data center AI demand remaining continuing to lead, modeling 3.2 million Nvidia flagship GPU units this year, but pointing to the possibility of 4 million as supply loosens. Noted that Nvidia dominates the accelerator market, so still a lot of bullish commentary around this. I do think that companies like Alphabet this week and Meta could potentially send NVIDIA either higher or lower based on their discussions on continued investment in AI hardware, which we know would have a direct impact on NVIDIA. So not reporting quite yet, but some of the other Mag 7 stocks could send, give it a clearer direction once they report.
It's not just Cramer who's currently bullish on Nvidia stock. In fact, an analyst at Melius Research recently disclosed that Nvidia has good demand visibility through October, as well as compelling potential from the Blackwell launch later this year. Nvidia stock has recently had its worst daily drop in over 4 years. However, Ben Reitzes from Melius Research has said that he doesn't think that investors should be worried about demand for the company's products, keeping a $1,000 target price on the company's stock and a buy rating. Additionally, the analyst wrote that while Wall Street may be nervous now about Nvidia's upside potential, the forthcoming Blackwell launch could spur double-digit growth at the end of this calendar year and throughout 2025. Aside from Reitzes, JP Morgan analyst Samik Chatterjee also sees an opportunity in Nvidia. He recently wrote that it was too early to rotate out of AI-exposed stocks to other technology companies, saying that updated earnings forecasts should justify AI stocks' premium valuations.
Caroline, I saw that UBS note, and the big, as you talked about, the big, I guess, thesis to that was decelerating growth numbers in terms of the acceleration of growth, and then acceleration of growth in the other parts of tech and non-tech sectors. So it was more of, hey, this has been the spot where it's been growing the fastest. That's not going to be the case anymore going forward. But it does sound like from how you talked about this that they still tend to be kind of on an island by themselves with this, let's say, neutral call, not even bearish. Are you surprised that the weakness that we've gotten over the last week or so, particularly on Friday, wasn't enough to scare more investors when it comes to these positions and the risks that they have?
I don't know. It seems like NVIDIA you can't keep it down. So it's not a big surprise to see it back in favor today. I was more surprised to see that huge pullback on Friday, I think. But at the end of the day, when we're talking about gains of 193% over the past 1 year, even 10% seems more like a healthy correction than anything bigger, given the fact that there's still so much bullishness on Wall Street around this name. I was taking a look. There are 58 analysts that cover NVIDIA, and despite the fact that it's seen this huge run up, only 4 don't have buy, or all but 4 have buy ratings. There are 4 hold ratings, and the rest 54 buy. And the median price target's $1,000. As you can see here, it's trading at $795. So analysts on average see about 25% upside from here, even higher with the $1,100 price target that I just mentioned from Oppenheimer. So I think that there's still quite a bit of bullishness around this name. We're still in the early innings of AI, but I think it is fair to note that competition is heating up. We're seeing it from AMD getting into AI chip space. We're seeing it from Intel. Those two haven't performed nearly as well as NVIDIA, so we'll have to see if they start kind of impeding on NVIDIA's success here.
Yeah, and Caroline, I saw this interesting article that was saying that basically with their lackluster performance as of late, that now a lot of analysts are moving to the sideline. And I was like, first of all, I can't find a single analyst I've seen taking on that approach, but also we're still up, 58% on a 12-month basis. Is that, I think that's ridiculous to imagine that's not good enough.
Well, I don't know. As we've seen with some of the analysts, they are positive until they're not, and sometimes they're playing catch up in terms of downgrades or upgrades. So you can't go only based on what the analyst community is saying. So I think that earnings will be very telling in terms of some of the commentary. And I think like every earnings season, but especially this year, I think that the guidance is going to be so key looking forward versus the actual top and bottom line numbers. So it's going to be a while. You thought May 2nd for Apple was a long time. May 22nd is going to be a while for NVIDIA. And I think that some of the early commentary that we've seen from some of the chip makers doesn't necessarily point to a totally rosy picture.
Another analyst that has a $1,000 price target on Nvidia stock is Morgan Stanley's Joseph Moore. But Moore isn't just bullish on Nvidia, as he thinks the company can absolutely destroy all of its rivals with its new Blackwell chips. As for the recent drawbacks in Nvidia's stock price, Moore noted that there has been some near-term anxiety surrounding Nvidia's transition from its older H100 chips to the next-generation models. With a lot riding on sales of the new Blackwell AI chip, some investors feared that there could be a pause in Nvidia's revenue growth, so they sold the stock to take whatever profit they could get. However, Moore said that his checks show no such pause, as underlying demand is strong. Moore isn't worried at all about rising competition from companies like Intel, Huawei, Samsung, and others, expecting Nvidia to maintain its market share. This is because Blackwell generation pricing, which will be around $30,000 or $40,000, looks to make a strong competitive statement. That should allow the tech giant to beat consensus earnings estimates and report strong guidance for investors in May. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Time now for our call of the day. UBS Investment Bank's chief U.S. equity strategist, Jonathan Golub, has downgraded the big six tech stocks, slashing his ratings on Apple, Alphabet, Microsoft, Amazon, Meta, and Nvidia to neutral from overweight. Golub noting he sees the rest of the tech sector and other areas of the market as more opportunistic than the stock market's 2023 leaders. Yahoo Finance's very own Josh Schaefer joins us now with more. Josh.
Yeah, Josh. So one thing to make clear about this as we sort of get into it is John Golub is a broad equity strategist, right? So he's saying the big six tech stocks, basically referring to them like a sector, like we would talk about energy or we would talk about tech or we would talk about industrials. So he had that in an outperform rating and he moved it to neutral, essentially getting to what you just alluded at there, Josh, which is maybe there's just less upside in these names. And he makes a case that's been pretty common on Wall Street, realistically, when we think about what he's saying here. He's really just talking about a broadening out of the stock market rally. And the fact that the other 494 companies in this case, because he's using 6 companies instead of 7, instead of 5, essentially saying that earnings are going to grow more for the other 494 companies than they're going to grow for the big 6 tech stocks that he highlights. And really what we're talking about from that sense too is earnings growth. So what you're looking at here in purple is what we're expecting for the first quarter. You can see 42% for that big 6. But then it comes down, right? So you're moving down. In the other 2 sectors that you have on your right there, you have the rest of tech, and then you also have the S&P 500 X tech. You're moving up. Normally, when you're buying a stock, you want to see growth metrics going up, not down, right? So it's really just quarter-over-quarter comparisons, and considering that maybe this massive run we've seen in tech, this huge earnings growth, is going to slow down. Where am I going to see earnings growth at a faster clip? Probably outside of that part of the market.
Were there any other variables he was considering? Whether, I mean, did it, like valuation, or was he saying the AI boom is going to go bust, or no? It was earnings.
See, that's the interesting. He's not calling that the AI boom is going to go bust or something like that, right? He specifically highlights in here that it really isn't a call on AI or really valuations. It's really just more so that rotation, and he's sort of looking for opportunity within that rotation, and where else do you go?
Yeah, and I feel like we've been hearing from more and more analysts and strategists about this broadening out of the market. I mean, I do have that question mark whether or not we can continue to see this AI insulation with a lot of these big tech names, especially if the Fed does keep rates higher for longer. I do think this push and pull means guidance is extra important this earnings season, and I think you already saw that with a company like Netflix. They reported Q2 revenue that disappointed, and that led to a drop in the stock. There were other variables as well, but guidance, I think, is going to be a big thing for investors.
And it gets to just the comps conversation, right, too, and how we get to year-over-year earnings growth. And it's comparing it to the growth that we saw the year prior. He points out in this note, when you think about it for tech, 2022 wasn't a good year, right? Tech companies didn't have good earnings growth in 2022. The stocks did terrible. So in 23, they flipped the script, but now you have massive comps. And the further you get into this year, you're looking at just a significant amount of earnings that you then have to compare yourself to. And from a growth perspective, that gets harder for these companies. I mean, we have Meta coming up later this week. They're supposed to grow earnings by almost 100%.
We all know that there is a massive rush into generative AI by companies like Nvidia. These big tech players are racing into the new technology with their vast portfolios of products and features, all aimed at not falling behind in a market that's predicted to generate trillions in the future. However, we must acknowledge that there will be difficulties along the way. Even UBS Global Research has recently downgraded its rating of big 6 tech stocks, namely Apple, Amazon, Google parent Alphabet, Meta, Microsoft, and Nvidia. Jonathan Golub, who is the chief U.S. equity strategist for UBS Investment Bank, noted that the downgrade of the stocks from overweight to neutral is not predicated on extended valuations or doubts about AI. Rather, it is an acknowledgement of the difficult comps and cyclical forces weighing on these stocks. But, in my opinion, Nvidia is currently in a great position to capitalize on the strong demand for AI and protect itself from any issues in the market that could affect its stock. And while Nvidia stock fell recently because of a sector-wide event, there was nothing really wrong with the company itself. In fact, its fundamentals remained strong. So it's hard to see why long-term Nvidia investors should even worry about any slight fluctuation in the short term. The company continues to innovate and bag new deals, like the most recent one with Vietnam's top tech firm, FPT, in which the two companies agreed to build a $200 million AI facility that will utilize Nvidia's state-of-the-art technology. The two companies entered into this deal with the hopes of making Vietnam a major participant in the semiconductor and artificial intelligence industries. And when you combine this deal with the 3 other deals the company recently received in Japan from the country's government, you get another AI segment that Nvidia could capitalize on, which is AI for governments and states. Think about it like this. If AI is going to be in our phones, our self-driving cars, and all the tech we own, our lives will be changed completely. So it's only natural that governments would want a piece of the pie. That's called sovereign AI, and it's a new opportunity for Nvidia that's expected to grow massively among thousands of other AI opportunities for the company. But what do you think? Is Nvidia a good buy right now? Let us know your thoughts in the comment section. If you would like to know more latest updates about Nvidia and what it's been up to, then go ahead and click on the next video on your screen. See you there.